A lot of professional traders are now going back into the market because it takes about a 3% move past something, a strong resistance like a triple top, and you can consider it a breakout. Well, this is almost a 9% move. Big news in silver. Technical analysis shows that the breakout that started back in March has been absolutely confirmed at this point. And this is really important because of the way professional traders trade. Now, there was a triple top that was far less than 1%. It was like less than 0.5% from each other. Triple top where the price went up and then was repelled at this resistance line, this green line. This big long-term trend line was the fundamental resistance that was broken back in March. It went up and made that triple top, and it got repelled at that resistance, which was a double top resistance back then. And it went back down and retested this trend line, and that resistance became support. Now it's gone up, and it has broken this resistance here and the triple top by almost 9%. So this is very significant because of the way professional traders trade. We're going to get to that in a second, but first I want to take a look at what's happening in the world. So we've got China selling Treasury and U.S. agency debt rises to record level. China just dumped the largest amount of U.S. Treasuries and agency debt in history. Probably fine. You know, we used to call this the nuclear option. Whenever tensions build between the United States and China, they've got so many treasuries that they can absolutely collapse our economy by just dumping them all on the market at the same time. However, global trade prevents war. This is very important. China does not want to ruin our economy because we are their biggest customer.
Real-world asset wealth: how to protect your wealth from the upcoming financial impact. Download this brand new report for free and get instant access to our resources. Click the button below the video now.
Their economy does well when our economy is doing. So as long as we can keep on buying stuff from them, their economy goes along just fine. They're in a trade surplus. We're printing we're typing the world's reserve currency into existence, and we get to buy stuff with it. And so that is causing us to have this consistent trade deficit that goes on for decade after decade. We're able to do that because we can pay our debts with the currency we create. But this is a bad sign, and when it comes to the global trade barriers and everything breaking down, and the death of the global dollar standard that I've been tracking since 2008, 2009. Russia confiscates 800 million euros from worth of assets from Deutsche Bank, Unicredit, and Commerzbank. And they're doing this to get back at when the U.S. and the Western world seized and froze so many Russian assets. So this is a tit-for-tat thing, and it is bringing the world economy down. Right now, we're still in these bubbles. Things are going along. The president just imposed a series of tariffs on goods made in China. Now, 25% on steel and aluminum, 50% on semiconductors, 100% tariff on Chinese EVs, and 50% on solar panels. Well, this will slow down China's takeover of the U.S. car market. In the future, I believe that the big three in the United States are going to be Tesla and two Chinese companies. You're not really going to see much from Ford and General Motors if they survive. But 50% on solar panels. Now, I want to point out that the president does not have the ability or authority to tax a Chinese company. When we're talking about tariffs, this is coming out of your pocket, not their pocket. Yes, it will slow down their trade with us, but as you slow down trade, there's less for them to lose getting into a war. I mean, if you're going to help to slow their economy by doing stuff like this, it the more that we come completely independent and sever all of our ties with the rest of the world, the easier it is for World War III to break out and for your life to be threatened. Moving on. What could pop? The bubbles, all the bubbles. They're out there right now. China home prices. This is the biggest fall. This is close to 1% in just April. Just April. And so this is a consistent downtrend now going on for a few years, except for just 2 months of tiny little gains in home prices. The rest of it is all in the negative. And that is their largest single consumer investment sector, real estate. Capital gains hikes. I covered this a couple of videos ago, that raising capital gains to 44.6% could be one of the things that helps to pop the stock market bubble, because the higher the tax is that you have to pay on any gains, first of all, you will have to beat inflation. Your investments have to go up 44.6% before you've gotten to a break-even point, when it comes to inflation. So, not to be outdone, Trudeau